fascinating week behind us. First kind of full week since the escalation. So many people, and I'm doing a bit of media. I was with the Gold Republic guys. I think they'll be putting out a video when I was with Brent Johnson, our dollar milkshake theory guy. They'll have something to put out. We had an individual video, so watch out for that one. And so many people are wondering, what's the game plan? It's a bit confusing with this. So everything is orchestrated and managed across nation states even. What's the game plan? What's the play? And there will be opportunities to build incredible wealth in what they're doing if you understand. But for most people that are not speculator investors, this is only a debasement and a loss of wealth. So the masses get impoverished by what's happening. The masses get impoverished by what's happening. Should be able to survive without the blue blockers. And why is that? Because of the excess debt and fiat proliferation. Remember, it's the first thing I'm going to tell you every single time we talk. The excess debt and fiat proliferation is our grand problem. Because of that, you're going to face debasement of your fiat and debt. But you don't benefit from the debt debasement too much. In a small level, you do. For example, if you have mortgages on a lot of properties, they may, in real terms, get smaller. But you're going to pay for it in interest rate hikes. Unless, of course, you've got fixed mortgages, which is something we've been warning of for ages and asking people to do. Fixed mortgages is a thing. You should contemplate doing it. And it's something we've been suggesting to you for many, a day, week, hour, year, month, etc. Why? Because they're going to spike the rates. And if they're spiking the rates, that's how they devalue the excess debt they've created. And the best way you benefit from your mortgage debasement is you're on a fixed deal. But if you try and get a fixed deal now, you'll find those rates quite a lot higher. Quite a lot higher indeed. Interesting day out here today. It's the weekend. The dogs are getting a run in the water. All of them. The best thing to do is still to fix, even though the fixes will be incredibly high. And to fix long against rate spikes. However, the other thing you need to understand is that rates will not go as high as they did during Volcker because we're far more leveraged and the whole system breaks a lot sooner. If you are expecting Volcker level rates, they won't happen. Why? Because when Volcker level rates happened, the US was at about 30-35% debt to GDP. Now you're at about 135%. Everything breaks and is far more sensitive. I've mentioned many times, I haven't said it recently, but I've mentioned many times about the hand into the sweet bowl. The more sweets you load up on, which is debt in this case, the more the hand can't come out the neck of the bottle. So the bigger it becomes, it can't get out. Because the neck of the bottle is narrower than the jar. And that's a little bit about it. They've loaded up with too much debt on the downside. You can only come so far up before it cannot compute, can go no further. The other interesting things that I've been wanting to make points-wise that I really would like everybody to get and understand is that it's very much like the OPEC creation, which was petrodollar, and OPEC was part and parcel. This notion that America was not involved in the creation of OPEC is the fake history you're told. The entire petrodollar system was built because of the excess debt of the Vietnam War. And they needed to secure dollar pricing so that they could go free float and get rid of the gold discipline and create the Ponzi scheme they have created. The Khazar, Kissinger, and all his friends was involved in introducing this, and the Khazar brothers and cousins in Saudi were the other part of that. And they created the free float dollar, which meant no discipline. No one could ever do a run on the dollar on account of insufficient gold again. And the order was first the overspend and the debt. So that was Vietnam War. Gulf of Tonkin was 64, taking you into 67, 68, the early stages. That was Kennedy, then into Nixon, and then into Lyndon Johnson presidencies. Officially, it only really ended in 75. So actually, it was longer than World War II as well, by duration. If you take the Gulf of Tonkin as the beginning of the setup play, you're 64 to 75. Right up till the Saigon moment, with the helicopter on the roof and the people being denied the last liftoff. So that humiliation, that of course fed into Hollywood, that gave you all the Rambo movies, the First Blood, all the Platoon movies and everything else. They know how to capitalize on pain and misery that they cause very well. That event also led to, they needed inflation to debase the debt. So they said, you guys are going to create an oil cartel and push the oil price up. That's exactly what happened. They formed a cartel, pushed the oil price up. What did that do? It pushed the cost of living and inflation onto all of us for the debt that they raised on that war. That is how you maximize the gains for self, military-industrial complex during Vietnam, and then you socialize the costs of those gains on fake and phony money on the rest of the world. Because everybody's fiat currency bought less as a result of the inflation of oil. And oil, as I've said, is a financial weapon of mass destruction in the hands of the Khazars. They utilize it as a Rockefeller tax for debasing debt that they've created. So they get the benefit of creating all this money. They sell it in, only a small circle get the benefit of it. Bungs, arms dealers, military industrial complex, then got to use it, run it down, replenish it. World War II, use it, replenish it. Vietnam, use it, replenish it. And all that cost doesn't benefit any of you, unless, of course, you work in the military industrial complex and you own shares and your shares go up, or you're getting bonuses for such largesse of government spend. Aren't you an awesome business? When that's what warmongers do. And it is why technology nearly always came out of the war machine. Bluetooth. You take Navy, Air Force, all of this, all the stuff you're using on system electronics came out of the military industrial complex, because that is the society they've incentivized. We could just do science and electronics and telcos, but no, it starts because of objectives that are sought to be done in the military industrial complex. And the military industrial complex benefits, gets very dark mercurial deals in boardrooms, a lot of dodgy political pre-commitments. If you take the F-35, it's an absolute white elephant, software clunkouts. It's an absolute mess of a product. But it had a guaranteed buyer in the US government. And They've even pushed it onto other governments as you'll buy arms for us. Here, have this cutting edge latest plane. So going back to OPEC, OPEC was with the cooperation of the grand hand that runs the whole world intended. And the Americans knew it, and they knew they were going to bring inflation. And with the inflation, they started the process of the devaluation of fiat and debt. You see how they are together? The devaluation of fiat and debt. And now, and then just to finish that, Volcker came in and hiked rates. New Fed came in, hiked rates, and killed the value of that debt and pushed rates really high and made housing a very difficult investment, nice and cheap and affordable in top line price if you were a cash buyer, pretty darn expensive if you were someone buying with finance. So that whole end of 68 till 82, which was when Warren Buffett showed up and became a cash flow buying investor, the whole equity boom, the financialization of everything, the whole equity boom that built Buffett was on free float dollar. That meant you could proliferate more money than ever before. And that's why we've had the culture of equity as well. Because money could be proliferated on an unbelievable level. That money could be spent with certain chosen oligarchs. That's why you have unicorn equities, all statist, all political handshakes and contracts, all bungs, an economy that you don't participate in, but that is building your surveillance grid, the data center world. Show you a little bit of the view. Keep the mic out of the wind for a bit. So in essence, you've already done this movie, but that was a half cycle. That was half time in a half cycle. That was the getting rid of gold phase. Once we removed that rev limiter and we went free float, we could proliferate like absolute whores, and we did. So that's what you've subsequently had. An unbelievable go mad. The rev limiter was removed. You could rev that engine to 13,000 revs. You could run that turbo hot. But guess what? Eventually the machine breaks. Overutilized, overhammered, absolutely busted. So the half time, which was actually more like in the first quarter, we're now done 3 more quarters of. Because removing the discipline of gold allowed for so much excessive financialization of everything. That's brought us to this point. And the death of the US empire. The ascendancy of the greater Israel Middle Eastern empire and the establishment of their power over the bottlenecks of Suez and Hormuz. And this Iranian Hormuz engineered supply chain. There's no shortage of oil. There's a logistical issue on the supply chain of that oil. There's no shortage of oil. This is not peak oil. This is an engineered by the dark hand of all countries and controlling all things to cause inflation, which is the impoverishment of the masses. Your cost of living shoots, yet your relative wages in real terms is absolutely collapsing. Remember my Ernest Hemingway convexity curve, slowly at first and suddenly very fast. You're going to start recognizing the debasement of the last, since the 1971, the gold removal. The full cycle starts at 1913. This is how you should be viewing it. The establishment of the Fed, the central bank, for the new empire hegemon. That was the very beginning. It wasn't even acknowledged as the empire hegemon at that point. It was set up. It had a clean slate. Britain was busy dying, and it was busy emerging. And the handover from Britain to America was one of the softest. It wasn't war. It wasn't fought over. It was congenial. It was done without any argument. It's very rare that such an empire ends in that way. Most empires end with the aging old fool swinging and throwing punches in the pub until someone clobbers him. And he gets a beat down and it's over. So, since the first quarter, 1971, so we have the big cycle, 1913 to today, 2026, which is 113 years, by the way, very interesting. And you have the smaller cycle to 71, where they got rid of the shackles that were limiting them, gold. Then they did the super financialization of everything from Nixon 71. They had to finish crushing the debt, so Volcker came in, hardship, stagnation, and high cost of living, stagflation, a combination of stubbornly high inflation with flat, low, and even negative growth. Stagnation, stagflation. So economic stagnation with inflation is stagflation. Where are you now? You've now, instead of finished the first quarter, you finished the whole enchilada now. The other 3 quarters included, where the rev limiter was removed, and you've gone from 71 to 26. That is 55 years. And now you have a thrashed engine, because the turbos were allowed to run to their absolute maximum, no restriction for longevity preservation. They stack debt, war machines everywhere, petrodollars, you name it, it's all baked in there. So what's happening now is you've had the debt run up. That was Nixon and the Vietnam War. You need the inflation that is OPEC created. OPEC, those Arabs far away created it. Nothing to do with how much money we created, spent, and frauded, because we kept creating dollars and we didn't have the gold. That's what France called bullshit on, and was right. So it started frauding and got caught. So imagine how if they were frauding in the 70s, where we thought there was some degree of principle. Imagine in this cacocracy times of Trump and Melania token and Charles Schwab sitting with Trump and front running, making $1 billion here and there on news that Trump's releasing on Twitter and Truth Social, pumps and dumps that he's creating on tariffs, announcements and reversals. Absolute fuckery, absolute fuckery. So we've done, what stage are we relative to the 70s? We've done the debt build-up a la Nixon, Vietnam, and Kennedy and everyone before them. World War II as well. We've now done the beginning of the inflation era. Iran this time. OPEC in the 70s. Same region, same tools, same system. Engineering a shortfall via supply chain. There's plenty oil. It's just all stuck in their containers in the Middle East. And there's no ships that are happy to run it. Financial system playing its role, refusing to insure. In some ways, you can understand that. Ships could be sunk. How do you push costs? Shipping costs shoot through the roof. And you've now got the perfect pinch on the bottleneck that is the Suez Hormuz complex of either side of Sinai. With eventually my suspicion that Israel wants to do that whole dig from the Mediterranean right the way through to Straits of Hormuz, have its own canal that it can control, squeeze the Egyptians out. Have the Somalis, remember they went into Somaliland, cause trouble on the Horn of Africa for anyone going through Suez. Make Suez a second-rate option, and they'll have the brand new option straight through Gaza, which they just cleared of people and flattened. So here's the grand orchestration with zero interest in life or common decency. So what comes next is you need the Volcker of the 80s, the early 80s, late 70s, early 80s, to come in and push rates up. Only this time you get the grand reset into the digital world. So the full cycle ends. Volcker did the rundown of the debt and set up the financialization of everything. Essentially reset the bond values, made bonds terrible, low price, high yielding instruments that then started to make them attractive again once the inflation was down and the debasement had occurred. So we're now going to, through Iran, get the OPEC and Volcker stage. We've already had the World War II, Vietnam War, excess debt build-up stage. But this is a far bigger, more excessive one because there wasn't the restriction of gold prohibiting the scale. So this is far larger. So interest rates will go higher, but they can't go as high as Volcker. Things will break long before, and they will break. And you already have private credit, no redemptions, and they're passing 401ks, everyday retail Joes, the ability now to invest in the likes of Blue Owl, which we called on a head and shoulder, mid-25, push through X, said head and shoulder, this is going down. It's a captured supplier to Meta only. So Meta basically set up an SPV to build out its data centers and get indebted so that it didn't have the debt on its books. Others haven't bothered. Oracle's just raised the debt. So here's the thing with the debt that they're raising. It's going to be exactly like Amazon in the .com. You're going to have an AI crash. All the small players are going to be flushed out. And later, all the unicorns that built the immense capacity will be left. Some of them might have changed hands if they were over-leveraged, if they weren't the right political connections. And then you will get the real value of the internet, the .com, in stage 2. And they'll have built absolute capacity to kingdom come because they've already signed the deals for the future surveillance grid, and government will be their client. And government will pay for it by stealing your assets. How about that? Government is going to pay these unicorns run by Zuckerberg, Bezos, Ellison, all these Zio pigs, out of money they are going to raise taxing you. But a large amount of you are going to be bust. Of us, let me say, it's all of us. Because your cost of living will have gone up. They're going to rein back what they pay in social services, welfare, Medicaid, all these. The social contract are going to be reduced. Or the values aren't going to be CPI linked until they're trivial because the fiat has been debased. But when it comes to taxing you, they'll take no account of fiat debasement. They'll take no account of fiat debasement. You won't have in real terms, your gold will be worth $25,000, but you'll be taxed on it all as profit. No one will say, but the dollar's lost the bulk of its value. It's only up 30% in debased dollar terms. Everything else is negative and down. You're going to have a stock market collapse on the AI because of interest rates. Tech doesn't like high interest rates, especially when the return is only coming later on the surveillance grid. When they're uploading your biometrics, all your files, tokenization, you can't even buy a car without it having a token. So that they can buy it online and turn it into a rental car with an Insta rental contract. You no longer own the car, you're a tenant in your own house and on your own car. Which is the thing that has always excited Lowell Finkelstein of BlackRock. Because part of what they want is for you to own nothing and for them to have taken it all. Monopoly is not just a game. It's how the banker gets to take all your assets. And they aren't finished until it's done. Until you concede as a penniless serf everything and I'll rent it and let everything. And when you no longer provide income, and AI and robotics has replaced a large amount, I don't think it fully replaces humanity at all. I'm not one of those guys, but in terms of certain things, it will be more efficient and effective in due course. What do you think they're going to want with all these bodies and humans that are on tax, income, revenue producing and are saying, feed me all the time? That's when your genocide comes. That's when your genocide comes. And that's where they're heading. In the meantime, try build wealth and keep wealth, because then you still have something they want that they have to find a way and a ruse to take off of you. Keep your wealth out of tokenization. Keep your gold out of tokenization. Keep everything out of tokenization. Pay with cash. Pay with gold ounces. Pay with silver ounces. Push back against the digital system. Last year, while the dollar collapsed, 12.5% even to the euro, 15 and 16% to the Czech krona and Hungarian florins, 40% to the ruble, physical assets went up in value. Precious metals were the star. They're going to suffer a little bit while the interest rates go up. Don't get me wrong. Platinum's going to go down. Palladium's going to go down. Silver's going to go down. Gold will go down whilst they create the fear, because everybody will be forced sellers. Those that got into private credit also have other assets. And they are going to be forced sellers of those liquid assets. And you know what always sells close to spot and everyone will buy? Gold. So you're going to have a lot of those that thought they were investing in gold that are going to be reducing their holdings in gold. They're going to be reducing their holdings in gold. And central banks and insiders and the khazars of this grand game will be taking it off them, but bidding low and benefiting from buying it cheaper. If you're an investor, you want to hold your silver, your platinum, and your gold. Trust me, the depth of a supply, even on lower prices, the supply is not going to be increasing greatly at all. And in some instances, you won't even get to trade and premiums might increase. So while they spike the interest rates, you can get a bit of a dollar run. The Korean won USD, Korean won trade. Oh boy. That H1 HVF has started, that we shared on X. That's in our Substack. The rising wedge, or on the daily, the falling wedge that set up the pop-up to the top line of a larger weekly rising wedge. So I'm verbally describing 4 charts. There's an hourly setup that broke, HVF setup. There's a daily chart that had a falling wedge that popped a spike up to a red line that I've drawn. Go look at these charts. Get them in front of you. Go look at our tweet feed. We shared the 4 charts. X, the market sniper. Follow there. The weekly shows that full rising wedge with the red line that you're now at and have just broken through. A flatly rising wedge that's actually going to melt up rather than down. Why? Because it's in the funnel zone of a monthly mega macro HVF. So the largest time frame monthly is a HVF and the smallest H1 is a HVF. The daily is a falling wedge that gives you the pop to the red line. That is a volatility squeeze. All of these 4 charts have one thing in common: volatility constriction. The hourly HVF, volatility constriction. The daily falling wedge with the bump out. Volatility constriction pointing down, pops out to the upside, takes you to the red line. The red line is the level, the line we expect to have broken on the weekly rising wedge. Massive weekly rising wedge. You're just popping out the top of it. But technicians will tell you, oh, rising wedges only break down. No, context matters. The monthly setup, a macro, mega upside HVF. 2,740 minimum, and I expect a lot potentially beyond. Overperformance is expected. So 2,740 as target. By the way, we were getting in at 1400s. We've been trading 1300s, 1200s, 1300s. We've been getting in and out, it must be said, holding it the whole time while we're waiting for it. Such a long term is tough. We're back in on our biggest size at the moment, the entire community. Click the link below if you want to build wealth during reset times. 2,740. That's going to represent a halvening just about. Not from current levels, about 90% of a halvening. So you'll lose about 45% of it. So you're going from our last and latest entries are around 1480. And you're going to 2,740. So almost double. For the target, which is conservative, and we expect overperformance. And you could have a super spike. Go see what happens in the 90s Asian crisis. And there is going to be Asian crisis vibes about this generally, but the Korean one is the weakest, because it's the most first world, but it's also the smallest of the first worlds. It has the least power over getting energy from Russia that China, for example, might have. And it has huge exposure to the AI bubble. So, there's so many reasons. We've done a write-up. Go have a look on our Substack. I'll put it through X later this weekend, so you'll be able to watch that. It's a free trade for you. Right there. Free trade. You're welcome. I hope you make money. We can be wrong. Own it. Choose to use it if you choose to take it. But that's it. And this is part and parcel of nations getting their fiats destroyed. And because of the money dying in America, there actually could be a shortage of dollars, and you will get, to a degree, Brent Johnson is right on when that moment happens, you can get a dollar spike, potentially. That's why I'm actually using the US dollar against the Korean won. The Korean won is also weak against the Chinese yuan. So this is a weakness and a frailty of the Asian currencies, and particular South Korea. But there will be certainly some benefit for the dollar, and there will be some headwinds for gold and silver during this period. And of course, oil can go up independent of the dollar spike because it's the primary reason. Longer run, gold outperforms oil completely. Always shall, always will. People say, look, they go up together. That's because those are inflation periods. If you look a little closer, gold is the capital preservational monetary metal. Oil is a consumable. Yes, it's a utilizable financial weapon that is regularly utilized by those that are behind it, but it traded zero not so long ago on a glut. When last did gold trade zero? Okay, not going to happen. So that's kind of where we're at. That's our story. That's what's going down. That's where you are in the 70s experience. And that's why we've gave the phrase hyper stagflation an extreme version of the 70s cycle. That's where our phraseology comes from. We explain it. Go look for the buttons that I share, hyper stagflation. Go look for the buttons that I share, controlled demolition. It's one of intent because it's designed to hurt you and impoverish you, and to help devalue the debt that they've raised and bail their banks out. Devaluing debt. And the solution will end up pumping gold and silver and platinum in due course. But first they can go down, and they can go down a bit more. And we've had technical setups on low time frames, small inverteds on silver, and etc., etc. It'll happen. They're going to ease back down. You're going to be in the range for a bit. But my suspicion is, once they're done with their shock and awe war on the citizens, financial war, inflation war, fiat and debt debasement war, you will then see their solution lead to immense runs in gold, silver, and platinum. And the other thing is on crypto. they will try push the use of stable coins, and they're likely to be quite successful. So the banks are going to prevent you. The possible lockdowns are going to be energy-based lockdowns, not flu and virus ones this time. They'll test their grid and their control over you with those. So energy-based lockdowns. You can't move, you can't fly, you must conserve. We all need it for emergency services, all of this. So this orchestrated bottleneck they've caused, they'll use it for social control over society, as they always do. Definitely not going to miss a shot there. There was another thought that just escaped my mind now as I was thinking it. What else are they going to do with that? So you'll get the equivalent of the beginning of 15-minute cities. Don't move so far. Use a bicycle, not your car, etc., etc., etc. There's something else that struck me as I was saying it, and it skipped. Store cash. Cash at home, notes, not money in the bank. I think the banking system is going to start doing controlled amount of withdrawals, no matter how much money you have, all sorts of rules. What are you spending it on? Because the credit problem is the banking problem. You have to understand, private credit is the dodgiest end of the credit curve, but it's the beginning of the fraying of credit. And banks are based off credit. They're all bust. They're bankrupt. And they're deeply engaged. Wells Fargo, JP Morgan, they're all involved in this private credit scam. Private credit is so bad, it's junk bonds and high yield debt is almost better because you can at least buy and sell there. You don't have endless liquidity, but you can buy those ETFs and you can sell them. Private credit, they set the price and then they say you can't sell or you can only sell so much. We're not allowing you to sell more. So it's the worst product possible. If there was a way to short it, I'd short it. It's like the Big Short all over again. It's the new subprime in certain senses. It's worse than junk bonds, Michael Milken of the 80s. And they control the liquidity, they control the spread, and they control how much you're allowed to get out if you choose to get out. And you're going to see more of that coming from banks, not just for people who invested in private credit, but for depositors in banks. So I would actually build your Tether, USDC, or any other stables holdings at this moment, because they're going to popularize digital money by making it more convenient. Those that have got stable coins will have more access to send money and receive, and they'll mainstream them. While making your physical money, it's not physical, but your digits in the computer in the bank harder to get to. That's how they shepherd you and nudge you into the CBDC, which is stable coins. They're going to pull these tricks, guys. So I'm burning in this hot sun here. I'm going to say goodbye. But a couple of key points. Physical cash at home, somewhere safe. Don't talk about it too much. Stack your silver and gold on the dips if you're an investor and you have it. Some people might be distressed sellers. Seize that opportunity. Awesome. If you've got the means to do so. And prepare for shock and awe, a la the run into COVID, and enjoy life. The sea will still be here. This beach will still be here. I can still do cold plunge. No one's going to stop me. Don't let them spoil your world and your life. We don't know how many years we got left with these mass murderers. Okay, bye for now.
Tired of profit wipeouts and blown accounts from following trade signal groups? Looking for a better way to trade? Why not be part of a principled, structured, and technically based community set inside a unique trading methodology? Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser or app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time, and with focused effort, you'll begin to look at charts, price action, and markets in a whole new light. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.